Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod, a tale of two American economies. Is it slowing down? President of the Minneapolis Federal Reserve, Neel Kashkari, thinks maybe, and the Fed might have to cut interest rates soon.
What are the ultimate effects of tariffs going to be on inflation? And what I'm realizing is we may not know the answer to that for quarters or a year or more.
But Disney's CFO Hugh Johnston sees another picture. Are Americans spending on fun?
There's lots of concern about the consumer in the United States right now. We don't see it.
President Trump takes a fight against Wall Street a step further, saying he was debanked.
And it wasn't just January 6th, it was DEI, it was ESG, it was fossil fuels, it was guns.
I think all this is going to come out as this executive order gets put in place, and maybe there's an additional investigation. So I don't think the story's over.
Let's hope not.
Plus, the rest of today's news, vaccine wars, the end of a Doge tradition, and ChatGPT's parent company's eye-popping valuation.
$500 billion without ever going public. That is astounding.
It's a very busy Wednesday, August 6th, 2025. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernen. Andrew will join us a little later in the show from the Aspen Economic Strategy Group meeting.
White House envoy Steve Witkoff arrived in Russia earlier today looking for a breakthrough to help end the Russia-Ukraine war. This comes just ahead of a deadline set by the President Trump, for Russia to agree to peace or face some new tougher sanctions. Russian media is reporting that Witkoff met with Russian President Vladimir Putin. President Trump has threatened to hit countries that buy Russian oil with heavy tariffs. He told us yesterday on Squawk Box he could hike India's tariff rate within the next 24 hours even. India has been buying a lot of Russian oil, but
So is China.
Yeah, but he would say it's not our fault. We couldn't,
They said they turned off, they couldn't get their regular supplies that had been diverted to Europe as part of this. But, I mean, this is that tricky situation that the Biden administration faced. They wanted to put sanctions on Russia, but they didn't want oil prices to go up. It's a fungible market.
Totally.
And so they kind of winked and nodded and allowed that oil to be sold in other places. If President Trump actually does crack down on this, and he said that it's funding the war in Ukraine, if he actually does crack down on it, it's going to be a big change.
I mean, we've had oil
Russia
people
can't do.
again and again saying Russia never had
to deal with, right?
Never had a problem selling its oil,
right?
Ever. With no matter, you try it here and it's like whack-a-mole. It's you stop something here, it's going to go. So people buy oil. They're going to buy oil.
Unless you put sanctions on people who are buying that oil, and they have to find other ways to come up with it, and then you see global oil prices rise potentially as a result. In the meantime, sources tell CNBC that OpenAI is in talks with investors about a potential stock sale that could value the company at about $500 billion. Those talks are said to be in early stages and would involve a secondary sale with shares being sold by current and former employees. Sources say that current OpenAI investor Thrive Capital could lead the potential round. Bloomberg was first to report on these latest OpenAI talks. The company announced a $40 billion funding round in March at a $300 billion valuation. This latest news on valuation comes as OpenAI released so-called open weight language models for the first time in years. That means you can use it and try and build things on top of it. It's not completely open source, but it is as open source as you're probably going to get. OpenAI says that they're meant to be lower cost options that developers and researchers can easily run and customize. But $500 billion without ever going public, that is astounding. And
you can imagine the demand if the company did go public, even with that valuation, it could open at $1 trillion.
Forget about Figma.
Could open at $1 trillion.
About Circle.
Yeah. Trump administration officially ending the drive by Elon Musk to get government staffers to send a list of, and everything comes in fives. He wanted them to send a list of 5 things they accomplished each week to supervisors, not 4, not 6. Many federal agencies had already phased out compliance with the weekly email. It was launched by Musk in February and mirrored moves at his other businesses, but it sparked tensions with the government bosses and confusion among the rank and file employees. And I mean, in total, they couldn't come up with 2 things, probably
the
much
thing
less
is, if you're somebody
5.
who actually is a producer, it's annoying to have this. I actually had a boss one time.
You don't think that in the government
wanted to
it's
know
like
every 3 hours what I had done in the last 3 hours. So I got to the point where I started going into his office to tell him every hour, to the point where he finally closed his door to keep me away from him.
When are your nearest government-run agency in New Jersey? You know what the 5 things they accomplished at some of these places? I'm not going to out anyone, but we picked where we're going to go to lunch to send out is what we accomplished today. You can, get your driver's license later.
My point is, it's probably not super effective, because if you could come up with a list of 5 things that you make up if you're somebody who is actually working really hard. I always figure, like, the people who go to the brown bag lunches,
it's per week.
You're looking to lay people off, go find them, because they're not too busy.
We get up at 3:30 5 days. We could say that.
3:45, yeah.
3:45?
I get up at 3:45
How do you
now.
do that?
I rush.
Oh, you rush. And HHS, that Department of Health and Human Services, canceling contracts and pulling some funding for some vaccines being developed to fight respiratory viruses like COVID and the flu. These focus on messenger RNA technology, which experts credit for helping to slow the 2020 coronavirus pandemic. HHS Secretary Robert F. Kennedy Jr. announced $500 million worth of projects will be halted. On his social media accounts, Kennedy criticized mRNA vaccines. Instead, he said he'd prioritize the development of safer, broader vaccine strategies like whole virus vaccines.
Although there have been questions about whether he's a fan of that either, about whether he'd really allow any of that to go forward. They've made some substantial changes in terms of the vaccine board. I think this week they announced that the AMA and some other patient groups or doctors groups would not be allowed to participate anymore in that panel. I think the official word from HHS was that they represented groups, and so they could be, they didn't want special interest lobbies in there, although I think it's hard to say that the AMA is a special interest lobby or that doctors representing patients would be special lobbyists.
I guess in years we will know, after some well-designed studies about the safety because it's a powerful technology, and it's very
the mRNA.
It's very controversial.
I'm talking about broad vaccines, not just mRNA vaccines. I'm talking about what they're doing with vaccines writ large for that approval process.
Right, but this is a much quicker, easier. It's almost like a vaccine 2.0 platform that was hailed with great promise. We don't know. I mean, some people will tell you it's been a disaster, and I just don't. I think we need studies to know about long COVID or whatever it is that there are people that still say they're finding spike proteins. I don't know. I don't know enough to say it. I've had I think I had 3 maybe.
Yeah, I think I did too.
I think I had Moderna's. I think 3.
I had Pfizer's.
So whatever's wrong with me.
It's not your fault.
It's not, maybe I don't tie it to the messenger, all the problems I have. I think it's more about age.
Yeah. All right, when we come back,
So Andrew, he's in Aspen?
Aspen Grove.
There's a conference coming up in Toledo. No. How about Detroit? Are all the elites going to? It's always Aspen. Isn't the Aspen Ideas Conference out there too?
Well, yeah, that's why.
Sun Valley.
Aspen
Sun Valley
Conference.
Sun Valley. Jackson Hole Symposium.
That's where Leisman goes.
Well, that's where they go to these places where it's amazing.
They're nice places.
Duh. I just feel bad for this Passaic, New Jersey. There's no way, right? They're hosting anything anytime. Allentown. Allentown?
And we're living here in Allentown. There's a song for every one of these.
Cheese will be next.
Coming up on Squawk Pod, Disney's Chief Financial Officer Hugh Johnston. The House of Mouse reported strong earnings today, thanks to good performance from its theme parks and streaming businesses. And there are a couple of headlines to flag.
I think the notion of sports being the one thing that's holding cable together is a highly overrated concept. I really do.
Subsidiary ESPN has announced a deal to acquire 10% of the NFL and is launching a direct streaming product to bring sports to consumers without cable subscriptions. So Disney is pulling out the stops to entertain America and staying away from culture wars.
Do you think you're in sync now with the current administration on cultural issues? I mean, you've scaled back.
Right now, what we are is we're reflective of where America broadly is right now.
Those comments while the president accuses another industry, banking, of playing politics. Big business and big opinions when we come back. This is Squawk Pod, now with added Andrew.
I'm Andrew Ross Sorkin. It is 5 a.m. where I am, Aspen, Colorado, along with Becky Quick and Joe Kernen.
What happens is I call up Bank of America routinely because when I was president, this was after I got out, by the way, I call up Bank of America routinely, and I speak to him, and I speak to a couple of people, and they have zero interest. Brian was kissing my ass when I was president, and when I called him after I was president to deposit $1 billion plus and a lot of other things, more importantly to open accounts, and he said, we can't do it. No, we can't do it.
That was President Trump on Squawk Box yesterday, speaking about being debanked. Now, yesterday afternoon, right here in Aspen, at the Aspen Economic Strategy Group's session, I asked Bank of America CEO Brian Moynihan to respond to what he saw in the morning.
I'm telling you, I'm still trying to unsee some of the visuals that he created with his commentary. But look, the president's after the right thing, which is the laws, rules, and regulations around our industry became used to cause things to happen. It's whether it's BSA, ML, whether it's KYC, whether it's reputational risk, and you heard Tim Scott quote about it. It is right to go look at these rules, because at the end of the day, they are causing decisions to be made that can be looked at in retrospect and made differently. We should get these rules right.
And guys, just to put a little context around what may have happened, and I don't think we know the details about exactly why a Bank of America might not have taken on the president or the former president at that time. This was post-January 6th. There was a number of investigations, including lawsuits and other cases that were taking place. A lot of banks, irrespective of politics, when things like that are happening, if you happen to be a target of potential criminal investigations or other things, which in that case were taking place, a lot of banks will not do business with you. So just a little bit of context about why that might have been happening, potentially irrespective of the politics, at least at that moment. I also asked Brian about what he sees in the economy, which is a big topic here in Aspen, and the debate over how strong it is or not.
What we have that's unique is we get to see the data, what our consumers are doing. And so if you look at them during the second quarter, April, May, June, April, May slowed down a little bit, Liberation Day. June kicked back up, and July has been stronger. So for the month of July 2025 versus the month of July 2024, our consumers pushed 5% more plus into the economy from their accounts.
In terms of spending?
Credit card, debit card, checks written, money out, cash out of the ATMs and spent, Zelle payments, wires, ACH, all those things, 5.5% more.
So they're an economic indicator, perhaps, that things may be better than some of the other data that we've been seeing. Joe, I don't know if I cut you off there because I know we're on a little bit of a delay. Were you about to say something?
Yeah, well, I was under the impression that it was regulatory overreach, and it wasn't just January 6th. It was DEI, it was ESG, it was fossil fuels, it was guns, it was climate change.
Oh, I think that there's a bigger question,
all kinds of pressure,
right?
All
not
kinds
specific
of pressure from the government,
not specific to Donald Trump's personal situation. I was trying to explain why I think Bank of America, to the degree that they were not banking him.
Did you ask
there was some
camera?
color there. I do agree with you. I think that there was definitely.
He gave such a nebulous answer. Did you ask him off camera what really happened? Because he basically was saying, yeah, that needs to be fixed, almost acknowledging that it happened, but not really saying, yeah, it happened.
Well, I think the other piece of this, Joe, is, you talked about guns, you talked about other kinds of things, oil, things like this. But you could do guns, for example. Part of the issue, and that has nothing to do with Trump on a personal basis, there have been over the years a view that that banking the gun industry is not as good a credit, if you will. That was actually the issue with crypto and some of this anti-money laundering stuff. So, and because I think there was a huge uptake within the conservative movement around crypto, for example, or for around guns relative to what you'd say were liberals who don't buy guns or whatever you think, that might have shaped why there's a view that it's quote unquote political. But I think that's that I think is at least explains a little bit about what's going on behind the scenes.
But and it is possible that regulators, and it was the Biden administration, came down on banks to say don't give. Is that not possible that happened? Whether you call it January 6th or whatever excuse you want to use, but isn't that possible? They said don't give this guy, don't let this guy do business with you.
Look, I don't think that's what happened. I don't think there were directives from the White House about who somebody could do business with specifically or not. I think there were rules, and I think there was a anxiety among the banks about going to regulators and saying we're doing this or we're doing that. Less about the names per se and more about the kinds of business. But nonetheless, I think all of this is going to come out as this executive order gets put in place, and maybe there's an additional investigation. So I don't think the story's over.
Let's hope not. Well, we love this kind of stuff. Yeah. All right. Moving on here, Disney earnings are out this morning. Earnings beat estimate. Revenue just slightly below. Joining us now is Hugh Johnston. Disney CFO Julia Boorstin is here as well. The stock, Hugh, it's good to see you. And I don't know where you want to start. Maybe start with earnings, because I think on the other news, the stock was reacting positively. It was up at, I think, 122. Now I think 117, 116. After, I guess, maybe Julia pointed out, you've been beating revenue estimates in recent quarters. So a slight miss here. You want to start with that?
Yeah, happy to go through the earnings. So overall, very good quarter for us. 2% revenue, 8% operating profit, 16% EPS. Most importantly, in a lot of ways, the two strategic businesses for us, the direct-to-consumer business, had a great quarter, made $350 million, well ahead of estimates, grew subscribers by 2.6 million, and revenue was up 9%. And then experiences, where there's been a lot of concerns, of course, because of the new Universal Park down in Florida. We really blew away the quarter, 8% revenue, 13% operating income. And Walt Disney World had its biggest Q3 ever. So certainly feel good from the perspective of those businesses. Traffic was solid, up a little bit, and then per caps were up very, very solidly. So, I know there's lots of concern about the consumer in the United States right now. We don't see it. Our consumer is doing very, very well.
The stock's been on a roll, obviously, but the promise of DTC and streaming and Disney Plus got that stock up. People were ahead of themselves. So excited back in, I guess during COVID. It was almost $200 a share.
It had a moment. It didn't last long, but it had a moment.
That was when everything was going to be streaming forever, and Hulu was worth $12 trillion and all that, and we came back to earth a little bit. But now you've got $350 million to talk about here.
Well, that's it. The business, we raised the guidance on that business from $1 billion of profit this year to $1.3 billion. And just as a reminder, it was only a couple of years ago, we were losing $1 billion a quarter on that business.
Right.
It was trading purely on subs and not on financial results. We now really have a solid foundation. What I like is strategically we're in a different spot than our competitors, in that if you think about Disney, ABC News, Marvel, Pixar, we make most of the content that we put on the streaming service, whereas our competitors rent their content. Even ESPN really adds a lot of value and makes a lot of its own content. And I think that's the differentiator for us, and it's going to allow us to continue to grow. It's also part of the reason we're adding 10 million subs in Q4.
So all of this news you just announced for ESPN and this big deal with the NFL, how does that change your outlook for this ESPN app that you're now launching on August 21st? And what does that all mean for this bundle that you're going to be pushing to consumers?
Yeah, so we're excited about the bundle, certainly, because what it does is it gives people yet another reason to not trade out and to churn out of the business. So as you know, churn is the thing that you really are trying to manage, and ESPN is another good reason not to churn. In terms of ESPN itself, to me, we're really innovating for the sports consumer, because if you have a connected phone or a connected TV, or you have a mobile app, you're going to be able to do so much more than just watch sports. You'll be able to do multi-view of games. You'll actually be able to get a personalized sports center. So, Joe, for you, you'll be able to see the Bengals and be able to see the Reds, basically a sports center that is just created for you. And in addition to that, betting, fantasy sports, e-commerce, all of that we think is going to make it really, really sticky. And we're making the price attractive. At $29.99, you get not only ESPN, Disney Plus, and Hulu.
Is that enough? $29.99, is that enough to make up for what you would have gotten from the cable bundle? Because people always talk about trading, analog dollars for digital dimes.
Yeah, it's closer at this point, Becky, to tell you the truth. And in addition to that, we think we're going to pick up a lot of people who are either cord cutters or cable nevers, so they're gone anyway. Right. And for us, the purpose of ESPN is to reach sports fans however they want to get there. That's the objective. So we think it's going to be accretive to overall earnings for us.
Do you have a sense, though, when it comes to the overall cable business? I remember when Bob Iger told me years ago that he realized that there was this trend that they needed to address by shifting into streaming. In terms of this trend, in terms of cord cutting, do you have a sense of how the overall ecosystem will be impacted, especially now that you have all this additional NFL content? Will you see cord cutting maybe more broadly for your other channels as well?
It's a great question, and candidly, no one really knows the answer to it. I think the notion of sports being the one thing that's holding cable together is a highly overrated concept. I really do, because there's a lot of reasons why people retain cable, and as we've seen, the cord cutting is leveled off a little bit anyway, so I'm not that worried about that. To me, what we're trying to do as Disney is we try to be pretty indifferent as to where the consumer wants to go. If they want to stay in cable, we're there for them. If they want to stream, we're there for them as well. And if you think about what Bob did a few years ago when he came back, he laid out 4 planks of creativity and sports and streaming profitability and then turbocharging the parks. Then a year ago, he said we were going to move from fixing to building. And now we're really in a mode where we're doing things for the consumer. We're building for the consumer. So I think that's what makes Disney a little bit of an entertainment company like no other, because we can kind of be where the consumer wants to be.
Hey, Hugh, just the origins of this deal with the NFL, again, pretty unusual deal, one that really has captured a lot of people's attention. Yeah. You said it was finalized a week ago. Where did those initial conversations take place between Bob and Roger Goodell?
Yeah, from what I understand, Becky, they've been ongoing for almost 10 years.
10 years?
It's been off and on for a long, long time. And as these things
how did it kind of like formulate?
Finally come together?
Yeah.
I think in a lot of ways, it just the opportunity for us on DTC to improve the product by doing this. And from the NFL's perspective, the belief that ESPN was really a good growth business, the timing just became right. As we know, the NFL has been looking at options for the NFL network and their media assets for a while. I think it finally was the moment where there was an overlap enough in terms of their interest and our interest that we were able to bring it together. And we're excited about it. I mean, we'll have more NFL games than we've ever had on ESPN since 1979, the founding of ESPN.
Do you feel like you lock out some of the other competitors who are trying to get those NFL games, because it's been whittled away by places like Amazon coming in? There's just a lot of places, whether that be Peacock or other places, that are kind of going after it. Do you feel like you have a better stronghold on the NFL as a result?
Yeah, I don't think so, and here's why. Yeah. There has not been a sports league in history that has monetized their assets and their rights better than the NFL. They are absolutely spectacular at it. So I think what this will do is we'll certainly be in each of our interests to work together, But the NFL is always going to operate in their interest of their players and their owners to maximize the value of their sports rights.
Hugh, everybody has to think about this, I think, at this point. Do you think you're in sync now with the current administration on cultural issues? I mean, you've scaled back, significantly.
Yeah.
DEI. There's no such thing as reimagine tomorrow anymore. That's totally gone,
I
right?
think,
You're in the sweet spot now. You feel like you can.
I think it's
they're not after. You're not on the radar, are you? If the president's watching, he goes, "Ooh, so. Disney." I don't know.
I actually think right now what we are is we're reflective of where America broadly is right now. I really do.
Were you 2 years ago?
I don't know. I was at Pepsi at the time.
I can tell you weren't. I can tell you you're seven imaginary, whatever the hell they were.
No, I think where the company is right now is in a good spot. And by and large, we're not here to be political. We're here to entertain, right? We're here so people can get away from all of that.
That's a shift because you were for a while.
Well, again,
before you were there.
I'm here to talk about today.
and all those right-wing snacks at Pepsi that you used to have. Remember,
sure.
That I loved.
As do I.
You do when you watch sports.
100%. There's synergy there for sure.
Snacks and sports, they go together.
Just like snacks and Pepsi.
Absolutely.
Just like content and theme park, generating that's been like.
And making content and distributing content. It's a super combination. If you think about where Disney is going to be right now, you'll have all of those great assets. The only thing we're missing from Disney Plus right now is CNBC. If I subscribe to CNBC streaming and I subscribe to Disney Plus, I have everything.
You might have a chance to buy us at some point. Just give me a couple months.
I know. Mark is a neighbor around the corner from me. So.
Is he, where?
Up in Greenwich.
In Greenwich.
Yeah.
I thought you meant Sea Island.
Yeah. So just saw him in a restaurant last week.
Welcome down there too. Whenever we'll host you together.
Absolutely.
Hugh, thank you.
Thank you.
And for being here, too.
Happy to be here.
And you're here, and you got Julia here.
Absolutely. Great to be here with you all.
All comes together.
Still to come on Squawk Pod, Minneapolis Federal Reserve President Neel Kashkari. He's reading America's economic signals.
Housing services inflation is gently declining. Non-housing services inflation is coming down. Wage growth is coming down. We've seen the jobs number, and consumer spending is cooling. All of that suggests the real underlying economy is slowing.
We're back right after this. You're listening to Squawk Pod from CNBC. While Joe Kernen and Becky Quick are in New York, Andrew Ross Sorkin is in Aspen, Colorado, with a slew of economists, investors, and former lawmakers to discuss the state of the economy at the Aspen Economic Strategy Group Forum. Top of everyone's mind? President Trump's pressure on Federal Reserve Chair Jay Powell and the recent firing of the Bureau of Labor Statistics Commissioner Erica McIntyre over a jobs report that painted a weaker than expected picture of the U.S. economy, even though economists have confirmed that the data in the report is not really in the commissioner's hands. We asked the president about that on Squawk Box yesterday.
I think when somebody says the commissioner is not involved, I don't want to get into any arguments with anybody. Why should I? She's a very nice woman.
Exactly.
But when they say that that nobody was involved, that it wasn't political, give me a break.
If you want to hear President Trump's full interview, scroll down on your Squawk Pod feed. That entire 40-plus minute conversation awaits you. But where does that leave the intricacies of economic and monetary policy from the people tasked to do it? Today, Andrew, Becky, and Joe are talking to an economist with a unique perspective.
Joining me right now at the Aspen Economic Strategy Group Forum, Neel Kashkari is here. He's the president, of course, of the Minneapolis Fed, and there is so much to talk to you about. I don't even know where you want to start, but maybe we'd start with what's actually just happening even inside the Fed, because there's a new opening, and then there's all the talks about the Kevins and what that means. And I'm curious, as somebody who's on that board, what it feels like.
It's uncertain. I mean, there's a lot, the Fed's in the news for a lot of reasons outside of just economics. And so that can be a distraction. And so it's just a reminder, keep focusing on the data, keep focusing on our jobs. And that's what we have to do. And that's what we are doing.
Okay. So rate path, of course, is the ultimate question that you guys have to solve.
Yep.
The president calls Powell too late constantly. The numbers, by the way, now that they continue to get revised downward, I think there's a group of people who increasingly look at those numbers and say, maybe he is too late. What do you think?
Well, there's two categories of data that I'm focused on. There's a bunch of data that I know and that I've got confidence in, and there's data that I don't know and we're not going to know for a while. The data that I think we know is that the economy is slowing. Housing services inflation is gently declining. Non-housing services inflation is coming down. Wage growth is coming down. We've seen the jobs number, and consumer spending is cooling. All of that suggests the real underlying economy is slowing. I've got confidence that that is happening. The part that I don't have confidence yet is what are the ultimate effects of tariffs going to be on inflation? And what I'm realizing is we may not know the answer to that for quarters or a year or more. And that tells me as one policymaker, I need to start leaning more on the data that I've got confidence in. The economy is slowing. And that means in the near term, it may become appropriate to start adjusting the federal funds rate.
If that's true, do you think you were wrong to hold off thus far?
No, I don't think so at all. I mean, I think the economy has held up remarkably well. I think these tariff shocks are unlike anything that we've seen in 100 years, virtually. And it's taken a while for businesses to try to process it, for policymakers to try to process it. And there's just been delays. And if you look at the average effective tariff that's being paid at the border, it's around 10%. It's been climbing now month after month. It's well short of the 16% headline rate. And so should we react as policymakers to the headlines, or should we react to what's actually affecting the economy? And that's what's making these judgments difficult.
We've been talking all morning about something interesting, which is why do you think companies have not taken up price in the way they did during the pandemic? Meaning, during the pandemic, companies took up price almost in advance of inflation that they thought was coming. With the tariffs this time, that has not been the case.
Well, I think it's a few different reasons. One is once there's a pandemic that everybody can see, and it's nobody's fault, it's just a terrible thing that's happening to all of us, it's easy to say, hey, it's not my fault. I think tariffs are more complicated. Are your competitors going to do it or not? You know, I was in Montana recently, a small business, she runs a small restaurant company. I said, how did you protect yourself against tariffs? She said in late January, she bought a year's worth of bamboo shoots from abroad and stored them to protect her and her customers from tariffs. It's remarkable that that happened at such a little company and at big companies. So that's also why we have not yet seen the full effects yet. People are working down these inventories.
And so when you say you're not going to know it, you 12 months, what do you think happens between now and the next 12 months?
Well, I think right now the economy is slowing, and I think that we're going to have to respond to that. As the inflation data starts to come up, we're seeing it now in core goods, but how high is that going to get? Is it going to spill over into other categories? And is it going to be persistent? We're not going to know the answer to that for a long time.
The piece of this is whether you think that tariffs are persistent, meaning whether you think they go up, they go down, they disappear. I mean, I think part of what the market is doing right now is to some degree discounting that the tariffs, at least as we know them today, stay that way.
Well, I'm assuming the tariffs will be persistent. Whether the tariff effects on inflation are persistent is the question that central bankers care a lot about. And that we're not going to know for a long time. And does it bleed over into inflation expectations? So the path that I think about, you know, I put down 2 rate cuts in my December last year, December summary of economic projections for 25. I maintained 2 in March. I maintained 2 in June. 2 still seems reasonable to me.
Before the end of the year, so 2 more.
Potentially. But now we've got a lot of data to come in. But sitting here today, I could see 2 rate cuts this year. But if it turns out that tariffs are having a bigger effect on inflation and it's more persistent, we could do 1 or more rate cuts and then we could pause. You know, if inflation really ticks up because of tariffs, we could even then raise again. The tariffs are just such an unknown right now, what they're ultimately going to do to the economy. I don't want to make any promises about the longer term future.
Becky's got a question back in New York. Becky.
Andrew, thanks. Neel, what you said, I'm just trying to put it all together. This idea that, okay, you're the second person this morning who says they've spoken with business people who really hoarded a lot of stuff, brought things in advance, so they haven't had to pass costs on to their customers yet because they're still working down that inventory. We heard the same thing from former Governor Sununu this morning. He's been talking to people about that. That makes you think that inflation could pick up. This idea of cutting rates and then turning around and raising them again later, I always thought you guys at the FOMC were really opposed to doing something like that because it looks like you made a mistake if you turn around and reverse course a month later.
I agree. I mean, this is what makes it difficult, Becky. I would love to not have to do that, but I'm realizing that these tariff effects are going to take a lot longer to really become clear. And if virtually all the other economic data is pointing to a cooling economy and a slowing economy, how long can we wait until the tariff effects become clear? That's just weighing on me right now. And so if the best of all the options is we make some adjustments and then we have to pause, or even then we have to reverse course, that might be better than just sitting here on hold until we get clarity on tariffs.
And suddenly everybody knows what the BLS is. And I'm just wondering, did you take those numbers with a grain of salt? Have you been doing that for a while, the initial numbers? And did you know that the rates were 60% and it's snail mail? And I mean, if you can get a 240,000 job revision in 2 months, just out of the blue, that makes your job so much harder. And I don't know, it's like you're trying to stand on something and it's, you're on roller skates or something. The rug can just be pulled out from under you. It makes it harder. I mean, something needs to be updated, no? And it's an important number. Well, it's what you use.
It's a very important number. It's a very important number to me and to my colleagues. But we knew all those things that you just said. We knew that there are big revisions. We knew that the survey response rates are going down. These are conversations that I have with my economists all the time. And that's why I look at a lot of other data sources, as do all my colleagues on the FOMC, to get an underlying view of where's the labor market going. If you want to look at supply and demand in any market, look at the price. The price of labor is wages, and wage growth is declining. It's been declining for some time. That tells me, yes, the labor market is cooling.
Neil, I want to show you, though, what Janet Yellen said about the firing of the head of BLS yesterday and this conversation about it being political. Take a look at what she had to say about it.
Well, I was appalled. Our statistical agencies have set the gold standard globally for the quality of our statistics. They're universally trusted and have never, to the best of my knowledge, been subject to political manipulation. It's all but impossible that there could be, given the controls in this system, political manipulation. And to me, this was a temper tantrum being thrown by a president who doesn't like what the statistics say about the performance of the economy.
What do you think of that?
It's not for me to comment on the president's personnel choices. I had no reason to doubt the integrity of the BLS data. And we'll see who the president appoints to succeed the person that he fired. But ultimately, we're going to look at their data. We're going to look at all the data we can get, all the conversations we have with businesses. All of this goes into our process to try to assess the economy.
Do you think there's now going to be a question about the credibility of the data? I mean, is that something that when you talk to your economists and analysts about in the future, that there's going to be an overhang? I mean, I was talking to a CEO here who said, look, China would come out with numbers every month, and then there'd be a conversation about, are those numbers real or are they not? And the question wasn't whether they were tabulated properly as a function of whether the mail came in properly that month or they're going to be revised. It was whether they're being made up or not.
Right. I'd be very surprised about that, getting to that extreme. Ultimately, you cannot fake economic reality. Right? Even if, in the worst case scenario, imagine that numbers are being faked for anybody's political benefit. People are going to feel what they feel. Companies are either going to be hiring or they're not. And so Americans are going to feel the economy. And so convincing them that inflation is not real is not a very effective strategy. Convincing somebody that the jobs number are better than they really are, I don't think it's actually going to work. So I don't even see the point of that.
You're going to get a new voting member very quickly, it sounds like, from the president. Maybe a temporary person is what he seemed to suggest, but maybe not somebody permanent. I don't know. What are the dynamics of that going to be like, you think, in terms of how votes get taken? And also, how much influence does one or two people actually have in the end?
Somebody has to win on the argument, right? Everybody's at the table. There's 18 of us now that Adriana resigned, but 19 of us at the table, all making our best case about what's happening in the economy. And you have to persuade your colleagues. And if this person comes in and makes great arguments that we all find very persuasive, they can have a lot of influence.
Neel Kashkari, thank you.
Thank you.
See you. Appreciate it. Guys, that does it for us today.
And that's the pod for today. Thank you for listening. As always, Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern to get the smartest takes and analysis from our TV show right into your ears. Please follow Squawk Pod wherever you get your podcasts. That's it. Have a great Wednesday. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.